It is mid-September, which means the weather is not only cooling down, at least where I am, but it is also time for your September real estate market update. Hi, this is Andrew with the Andrew Smith team at eXp Realty. And this month, I'm going to divide the market update into three sections or three distinct sections, if you like. First thing that we're going to do is look at the overall real estate market, the latest trends of what is going on right now. Following that, we're going to take a look at the future of home prices. What's actually going on with prices, and what do the latest surveys show prices are going to do going forward? And then lastly, one thing that we haven't talked about in the last couple of months that I did want to go back and address was the latest information with regards to mortgage forbearances and what that could potentially mean for foreclosures going forward. Now, if this content that I put out actually every week is of interest to you, you like it, do me a huge favor. Go ahead and click that like button right below. And if you'd like to, subscribe to the channel. I would greatly appreciate it. All right. So starting with the real estate market overall, as you can see here, the first slide I've got up, CoreLogic. Frank Martell is the president of CoreLogic, and he is saying that on an aggregated level, the housing market remains rock solid despite the shock and awe of the pandemic. And it's something that's actually surprised a lot of people. If you or anyone you know has been in the market to buy, you'll know that the market is not slowing down at all. It has come out of the gates following lockdowns roaring, absolutely on fire. There is limited inventory. There's a lot of buyer activity, which has caused home sales to surge. So why is that? There's a couple of different reasons. We've talked about them before. One is the pandemic itself seemed to show people that their current homes weren't working as well as they thought. They need more space. Working from home is becoming a little bit more normal. There's a lot more virtual learning with schools going on. And as a result, people are starting to look at the space that they're currently living in, saying, this isn't working as well. We need another home office. We need another space where the kids can do work, or we're spending more time at home. We'd like a bigger yard. We'd like a pool. We'd like, outdoor area. All of those different factors add into it. But what else? Interest rates. Yeah, interest rates are the other key factor. So as a matter of fact, interest rates, that number on screen, it is hard to even fathom and wrap your head around. They have fallen to new lows. So just recently, the average 30-year fixed rate mortgage was at 2.86%. That's just a phenomenal rate. And the thing is it's often hard to put that into perspective on what exactly that rate actually means. So I'm going to help you here. So this is a look back at recent decades and what the average rate by decade actually was. Look at the 70s, 8.86, 80s, 12.7, 90s. That's actually when I bought my first house, in the 90s. And that's about where the rate was. I was at 7.9% when I bought. We went into the sixes in the 2000s, and then the low fours in the 2010s. And now here we are, the latter part of 2020, and we're at 2.86%. With that in mind, it translates to affordability. It's something that we've talked a lot about in the last couple of months. But what exactly does that mean to you? I mean, how does it equate to you if you're in the market to buy a home? Well, let me show you. Those shopping for a home now can afford 10% more home than they could a year ago, while keeping their monthly payment unchanged. So think about that for a minute. You can now afford 10% more home than you could a year ago for the same mortgage payment. Now, yes, you could turn around and say, but home prices have gone up, and that's true. And this is obviously a generalization. It's an average, and how much prices have gone up in your area is going to play into this affordability index that we're looking at. Not all areas have gone up in excess of 10%. Here in Frisco, Texas, where I am, year over year right now, we're up about 2%. You look at Prosper, on the other hand, adjacent to us, they are up just a little bit over 10%. Same in Southern California, where my team also works, in Temecula Murrieta area. Prices in that area are up anywhere between 8 and 12% year over year. So it varies. But the point being is, even with appreciation over the course of the year, with that drop in interest rates, it still means that you're not in a worse off position from affordability. And this has been seen when we look at mortgage purchase applications. Now, an interesting thing has been showing the last couple of weeks is the week over week number of mortgage purchase applications, which would be considered a leading indicator. Meaning, if somebody is applying for a mortgage, there's a high likelihood that they're going to be buying a house in the near term. If they're going to be buying a house in the near term, that leads to an increase in pending sales, which leads to an increase in closed sales, and so on. So last 3 weeks, 4 weeks even, the number of week over week mortgage applications has actually slightly declined. We're not talking a lot, 1 to 2% in general. However, when we look at this on a year over year basis, you can see that year over year, mortgage applications are running well ahead of where they were in 2019. 25 to 30% higher than what we just saw a year ago, right? So why is it going down week over week then? That's probably, we're running out of the pent up demand. What I mean is, during the shutdown, during the lockdown, a lot of people that wanted to buy a home, those spring plans were put on hold. They were pushed forward into the summer. And here we are starting to go into the fall. With that in mind, you're starting to see that taper off, meaning a lot of that pent up demand is probably starting to work its way through. But overall demand, as it relates to last year, is still running significantly higher. So with that in mind, real estate prices, the future of prices. We've talked about so many times that real estate prices are like anything else. They're based on supply and demand. The single biggest thing holding the market back right now is supply. We don't have enough homes for sale in most areas of the country. Here in Texas, it's common that homes get listed if they're in good shape. They sell very rapidly. Southern California, the exact same thing. So supply is constrained, but demand remains high. So what does that mean for home prices? That means they go up. Okay, so here's the latest forecast on what home prices are going to do over the next 12 months. And you can see almost across the board, except for House at the very end there, are forecasting that prices are going to increase. Again, this is national average on what the increase is expected. Many areas in the local markets, which I'll cover in a separate video, are going to see price increases that exceed these numbers. More important than what we're seeing here, though, by all of these major participants, is how they've changed their projections over the last few months. Here's what I mean. Look at Fannie Mae. Right before the pandemic, they were forecasting 0.4%. Now it's 4.4. Look at Zillow. They were forecasting prices to decline 3%. Now they're forecasting a 3.6% increase in home prices. And the biggest one's CoreLogic. 6.6% decline in home prices over the next 12 months. They're now forecasting a 0.6% increase. So again, the way that the housing market has responded has taken a lot of people and analysts by surprise. It has been exceptionally strong and is helping to lead the economic recovery. So not all good news, though. What we want to look at now is realize that there are people in trouble. Unemployment has still been there, even though the number is falling. And there are a large number of homes that went into forbearance, which led many people to say that a wave of foreclosures was coming and that the impact on the housing market would be a flood of inventory, declining prices. That's not happening and isn't forecast to happen, which is why some of these numbers are changing. So let's take a look. So when we look at the number of mortgages in active forbearance, you can see we go back to the end of May, we're running at 4.76 million. Right now, for the last 3 weeks, we've been at 3.93 million. What exactly does that mean? Okay. Well, it means that the number of homes that entered a forbearance, right, has come down. There's not as many mortgages in forbearance now as there was just 3 months ago. Okay. So that number is leveling off. We still have to realize that even though that number is leveling off, doesn't mean that everybody is going to avoid foreclosure. It doesn't. That's going to be, unfortunately, part of the landscape going forward, but it's not necessarily going to be the wave or the flood that people were previously predicting. Here's what the senior mortgage reporter at Bankrate had to say. So, the COVID-19 pandemic will lead to a rise in mortgage defaults and foreclosures. But as the housing market muscles through this economic downturn, it looks as if foreclosures will form a trickle rather than a flood. That sentiment is being carried over into many of the other major institutions. That means that the likelihood of a huge flood, tsunami of foreclosures coming, similar to what we saw in the Great Recession, that big crash in '07, '08, '09, it's just not going to happen. But again, does that mean that there won't be any foreclosures? No. It's important to remember that foreclosures are a part of every market, always, good and bad. I've got a slide here to kind of explain that. So the percentage of distressed property sales, this is going all the way back to January 2012. If you look at it, in January 2012, 35% of all sales were distressed sales, combined of foreclosures and or short sales. And you can see that trend has gone down. And even through the last few years, when the real estate market has been incredibly strong, there have still been distressed sales. There always has been. They are part of every market, but it's nothing to shy away from or be overly concerned at based upon the current information. Right now, we're looking at about 1% of all sales being distressed sales. All right, so when we look at all sales, this is the part that's fairly amazing. What does this mean going forward? What can we expect if we're thinking about selling or thinking about buying in the next 12 months? So Lawrence Yun is the chief economist with the National Association of Realtors. Sorry. And here's the thing that's amazing. Even with the shutdown and the lockdowns that we experienced in this year, Yun is forecasting existing home sales to ramp up to 5.8 million in the second half of the year. That expected rebound would bring the full year level of existing home sales to 5.4 million. So the pace, when you look at the first half of the year, was obviously way down. The second half of the year, we're running at a pace that would equate to 5.8 million home sales in a year. You combine the first half of the year with the second half of the year, the forecast is for 5.4 million homes to be sold. That's up over last year. A 1.1% gain compared to the number of homes that we sold in all of 2019. Considering what a strange year 2020 has been and what we've been facing, that's pretty amazing. Okay. Next year, they're forecasting that home sales will continue to increase and be up anywhere between 8 and 12%. So the market that we're in currently, do we expect to see some seasonality, some change going forward? Yes, we do. But is there an impending crash coming or a major catastrophe? Not that anyone is forecasting, and more of the leading economists are saying the exact same thing. They're expecting housing to remain a bright spot and be strong. So nobody knows for sure. Crystal ball doesn't know. We've got a lot of things coming up, including the election and different trade agreements being worked out. What impact is that going to have? We'll have to wait and see. But right now, I did a video just a couple of weeks ago on what impact the presidential election is likely to have on the housing market. I'll include a link to that directly below. But everything right now for housing looks pretty good. So if you've been in the market to buy or you've been considering selling, it might not be a bad time. Obviously, the best time is when it's right for you, but hopefully this information helps to allow you to make the best decision for you and your family. I'll see you next week.